Another video. Today we are going to take a look at the worst currency against a possibly stronger currency. Yes, ladies and gentlemen, we are going to take a look at the Eurocad from a technical, fundamental, order flow and sentiment perspective as well. If you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now, the first question I want to ask was from a gentleman in the YouTube who asked me about the backtesting. So I not sure if you understood the answer, but backtesting is basically where you learn a strategy. So you go back into time to go and apply that strategy into a onto historical data just to get an indication of whether it would have worked back then or not. Now let's dive in with a technical analysis. Now starting on the monthly time frame, what do we see? Now purely based on the most recent structure that the market had created, we can see how the market had tested this level as a level of support. Support got broken and the market is testing that level as resistance at the moment as well. I can also see how the market found support at that level and we got the rejection that we anticipated or looking for. Also, this long wick that you see here is normally just a retracement on a lower time frame. Now, if you drop down on the weekly time frame, what do we see? Now, I just spoke about this now, so you can see how we're at that pullback. We can also see how the market printed this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci, from the high to the low of this impulse. Now you can see how the 0.50 got tested as well as the 0.382, giving us an indication that we are still trading within a bearish environment from a technical perspective. Now if we drop down on the daily time frame, what do we see? Now you can clearly see here this was the most recent structure that the market had created, and this level over here acted as a level of support. Support got broken. This was support got broken. Market came to test it as resistance. Broke above that, tested as support, and support's not holding as we can see over here right now. Now, the best way to approach the situation is to obviously wait for a clear daily close above this level. Why? Because once the market closed below this level, all of this resistance would then be turned support. All of the support would then be turned resistance, giving us a good indication from a technical perspective. So what we are going to do is we're going to wait for this daily candle to close first, and then on the retest, we're going to start looking for buying opportunities for the market to continue lower, because we'll have the confluence of the market hitting that level of resistance that is now turned support at that level over there. So that's how we're going to approach the situation. Now, in order to get a target level, all you have to do is take your Fibonacci from the high to the low. You can see we got a 0.50 pullback, and you can expect the market to pull back to go and hit that level over there, which is going to give us a confirmation of an equal low. We could potentially see the market pull back after creating structure and then continue to the downside there as well. Now, the next thing we're going to look at is the order flow data, so the commitment of traders, and this tells us what the biggest banks, hedge funds, and institutions are doing in the market. We can see based off last week's report, hedge funds actually came in and they added 14,000 long positions, and they also added 8,557 short positions, obviously anticipating that the bank were going to hike interest rates this week. Unfortunately, it was a no for them. The overall positions had also increased from 59k to 64k. Now the Canadian dollar added 3,220 long positions, and the markets hedge funds came in and they closed at 1,667. So they have no interest in selling the cat, they just want to buy. Overall net positions jumped from 9,000 to 14,000, give us an indication that we can expect the Canadian dollar especially to increase in value over time, because you can see how the markets also came and they added selling positions, but no sells were added for the Canadian dollar. The next thing we are going to look at is the sentiment data. Now the sentiment data tells us what retail traders are doing in the market. Based off the last report, we can see here 30% of retail traders are selling and 70% of them are buying. And you can clearly see why the market is also moving to the downside, because it needs all of that liquidity of all these buyers. Because you got a lot of buyers sitting here and the market's going, no, we're not ready to go to the upside. And as I always say, you always want to be on the opposite side of what the retail traders are doing in the market as well. Now, the most interesting news about the euro and the CAD firstly is that if you look at this is an interest rate report, now you can see a based off pre-pandemic, excuse me, when the pandemic came in, what happened was basically the Bank of Canada held interest rates at a quarter base, and we actually saw them come in last month. Uh, yeah, and they hiked it with another quarter, which brought it up to 0.5. So it was all the time I was saying at 0.25 from the pre-pandemic, because that's what a lot of banks did. When the COVID kicked in, they reduced the interest rates because they wanted to encourage consumers to spend. And now that consumers have spent and made a lot of debt, they increase the interest rates. Now that means they need to pay back more than what they initially borrowed the money for in the first place. Now we can see obviously here the Canadian dollar is doing the honorable thing. They're doing the right thing by hiking interest rates to, the, just like they encourage consumers to spend with low interest rates, hiking interest rates will slow down consumer spendings there as well, which is exactly what you need to do, which is what we are seeing happening with the US dollar as well. As for the euro, you can see here why I say this is the worst performing currency, because why interest rates has been sitting at zero for as long as I can remember. The inflation is sky high, and the bank had hinted that they might only start hiking these rates by the end of the year. Also, we got the Russia and Ukraine crisis. We also know that they are going to cut supplies from Russia uh, for for uh, for uh, uh, for fuel imports for the euro. And if those supplies are cut, that means that fuel and energy prices are going to increase in for the euro, which is going to which is going to put even more strain on the consumer, which is going to potentially lead the euro going into recession there as well. Now, ladies and gentlemen, that is a full update on the situation that we have here on EuroCat. I want to say thank you so much to you guys for the support. Thank you so much to all of you that um, is supporting the channel. I also want to say you should have a very good day. Thank you so much. If you enjoyed the video, please smash the like button, share it with as many people as you can that you think need help as well. Thank you for your time. And as always, cheers for years.